Hey everybody, John Felici and
Sally Pearson.
Security National Mortgage Company. We thought that we would take a little bit of a break today and talk about a subject that I think that a lot of people have a lot of misunderstanding about, because I definitely answer a lot of questions about this, and I've had several circumstances where people have got into purchase agreements not fully understanding what closing costs are and what their part is to pay those closing costs. Now, first of all, let's start out with what are closing costs. Closing costs are the things required for you to buy a home. Things like could be an underwriting fee, could be a processing fee. Homeowners insurance is an expense, figured into the total amount of closing costs. But all in all, the total closing costs make up the fees associated with you purchasing a home. So now, how does this play out whenever you're buying a home, like in conjunction with your down payment? The down payment, for example, for a FHA loan is 3.5%. The down payment for a USDA loan is 0. So then, let's say that you're doing a USDA loan with no down payment. Well, even though there's no down payment, there are still closing costs. How much are closing costs? Well, let's just use an example of maybe about a $150,000 home. Well, you're probably going to have anywhere from $1,000 to $1,500 in lender fees. There's a couple of $1,000 which goes to the title company for their various fees and charges, closing fee, title insurance. There's some fees that go to the state recording fees, mortgage tax, things like that. Then you've got your taxes and your insurance. On a home that you're maybe purchasing in or around the Tulsa area, metro area here, if your purchase price is about $150,000, I would say that your closing costs could be anywhere from about $5,000 to $7,000. So then, for the person doing a USDA rural development loan who is expecting to have no money down, then all of a sudden you have up to $7,000 in closing costs. Now, unless these closing costs are negotiated into the sales price, or you have the money to pay them, the responsibility for these closing costs falls on you. So how can you buy a home without having to pay closing costs? Well, there's no way to avoid closing costs. No matter what you see on TV about no closing cost loans or whatever, there are always going to be closing costs involved with a loan or a home that you purchase. It's just who pays for those closing costs is the question. Now, on virtually every type of mortgage loan, you have the ability for the seller to pay up to a certain amount of closing costs. A USDA rural development loan, they can pay up to 6%. So if you've got a $100,000 loan, then that means they can pay up to $6,000 for your closing costs. That would cover virtually 100% of the closing costs, and then you would turn the no down payment loan into a loan without closing costs out of pocket. You could truly get in there without any money due at closing. So then, how is it that you can get these closing costs rolled into the sales price? The answer is that you need to have a good real estate agent. The negotiation process for any mortgage, any home purchase is going to be handled by the real estate agent. Most real estate agents are going to know, or they should know, what your financial situation looks like as it pertains to down payment and closing costs. They should be in contact with your mortgage lender. They should know these things up front. But I do have instances, and I hate to say, but I do have more than a few instances inside of probably every month where we get purchase contracts where the real estate agent did not realize that they needed to negotiate the closing cost into the purchase price. Now, how does that work? To negotiate closing costs into the purchase price, all that's going to happen is the real estate agent is going to determine what amount the seller wants for this home, and then we are going to need to literally negotiate those closing costs into that price. So that if you've got a home that you're wanting to make an offer of, I don't know, $155,000 on maybe, then your closing costs are $6,000 or, give or take. Let's just say $5,000 since it's a simple number. Then what would need to happen is the real estate agent is going to need to offer $155,000 for the sales price, with the seller to pay $5,000 in closing costs. So that way, your closing costs are rolled into the transaction, and you're not going to be out of pocket for those at closing. it's just it's an unfortunate event when real estate agents do not realize what the buyer's needs are and what they need to be. You do not have to pay closing costs. If you are unable to, you should be able to negotiate those in there. So, I mean, keep in mind, it's like, FHA loan, 3.5% down. If your closing costs are not negotiated into the sales price, then, you're buying a $100,000 house, that's 3.5%, $3,500. Not only are you responsible for the $3,500, but you're also going to be responsible for another $6,000. So then that could be as much as, almost $10,000 that you might be bringing in, instead of the $3,500 that you thought. So everybody, I tell you, if you need more information about this subject or maybe anything else, even though she didn't say much today.
Just here for moral support.
Moral support, yes, yes. She knows a lot more than what she talked about today. So Sally or myself can always help you out. You can reach us up here at the office, 918-286-1226. My cell phone number, 918-630-1991. You can message me here. So anybody, if you need us, you know where to get us. Anything you got to say?
No.
All right. Well, hey, you guys have a good day. We're out.